In 3, 1, and we're live. Welcome to Interchain FM, the Cosmos radio station. If you're seeking alpha in the cosmos, look no further. I'm your host, Chango Unchained, and I'm here with LayerZero Labs, one of the biggest Omnichain protocols, next to IBC, of course. By the way, Brian, if you weren't already anticipating this, there's going to be a lot of IBC maxis in the chat today, so
it's fine.
I'm sure they're going
to. We're big fans of IBC. I think we wrote about IBC from the earliest moment we built LayerZero. So no, we're big fans of IBC in general.
That's amazing. I would love to hear about that story. Actually, was that part of the exploration before you guys decided to build LayerZero?
Yeah, 100%, right? We didn't want to build LayerZero at all. There was just nothing that could do what we wanted to do. We thought IBC was extremely interesting, and the light client model was probably the best model to approach things, but it was just completely infeasible in terms of going outside of the Tendermint ecosystem, right? Like trying to write every single block header to EVM chains is just not practical. It's not something EVM chains can do intra EVM. It's not something that has been done well from Cosmos out to EVMs. And so that just introduces this whole own set of problems.
Right. Okay. So I see. So you were coming at it from the EVM lens and looking at it like, you know, what sorts of protocols are available out there for us to use because we want to do cross-chain. But unfortunately, IBC has its limitations because it's too expensive to verify signatures in that manner on the EVM. It's going to be too gas intensive.
Yeah, it's not the signature verification itself is fine. There's things that you can do to reduce it. It's more the frequency, like the way IBC right now is you're effectively writing every single block to every chain, right? You're maintaining a complete light client on both chains between each other. And that works great when gas is near free and you can do a lot of transactions. But if you wanted to write every block from like Luna at peak to Ethereum, like good luck, right? You're going to spend $50 million a day or something just to maintain that one light client pathway.
Right. Okay. So I see where you're coming from. Yeah. I guess the economic considerations were a little limited now that you mention it, because the assumption is that they're going to be high throughput, fast finality blockchains, just like Tendermint, and nearly zero fees per transaction. From that perspective, would IBC work well with the Solana VM?
Yeah, I mean, there's so again, it's sort of like Solana is different. They don't have like true proof of history, but it structurally was meant to be like a little bit different. We ended up LayerZero, like the solution we ended up landing on was just agnosticizing all of this, right? Like you can actually use IBC as a verification layer within LayerZero. Like that would be totally fine. You can do like for us, we're agnostic to what that actually looks like. That's more of a method of how you do verification versus the transport layer itself. And so like that was our end approach, is that, hey, you can have a totally different set of validation methodologies when you're going intra EVM versus when you're going intra Cosmos versus when you're going like between the two systems. And so our end state was like, this is too opinionated with how it is right now, and that it won't actually be able to scale to all systems, and systems are going to keep making these like very strong orthogonal trade-offs and how they exist, and that you needed to basically create a more minimalist structure for the transport layer itself. Like it really should only do a couple of things, and then everything else kind of can be possible on top of that.
Oh, gotcha. All right. So I want to put a pin in this and come back to it later, because we kind of just like dove in right away, just like boom, no filter. But let's go with your background and how you got started in crypto and how you ended up building a cross-chain interop protocol.
Sure. Yeah. All right. My background is I grew up in like a very, very rural place, 900 people in the middle of New Hampshire, like effectively just a tiny village with nothing to do. But I got a computer when I was 5 years old. And so I was just like on my computer all the time. Went to school for computer science, dropped out after 3 years to play poker professionally. Played poker professionally
There's
for
so many poker players in like ex-poker.
there's a good reason.
Yeah.
So
Why? Because you're good at game theory?
No, the reason is that in 2011, April 15th, 2011, online poker got banned in the US. And so all of the payment processors were dead. PayPal, NetTeller, Skrill, Moneybookers, all gone. And so the poker sites that remained needed a way to allow users to deposit and withdraw. All the shady sites that were left, they all adopted Bitcoin back in April 15th, 2011. So like every poker player was using Bitcoin like pretty regularly from the period of, let's say, 2010 to 2013. Like all of us touched it. It was like real product market fit. Like we held the Bitcoin, we would deposit to a site, and then when it came back, you'd play in US dollars on the site, they'd mark it to a value, but then when you come back, you just hold Bitcoin because like you wanted to be able to have a wallet to deposit to other sites, sort of as you needed. And so all of the poker community was exposed to Bitcoin like very, very, very early, with actually using it, not even just like pure speculating. Like we need this as a payment processing method. Yeah.
And so Bitcoin was the poker world's stable coin back then.
Yep.
Nice.
Yeah.
Okay. So how did that segue into crypto ultimately?
Yeah. So drop out, played poker professionally for 8 years, did 80 countries. 2011 comes up, online poker gets banned. So I start playing with Bitcoin a little bit then, but I started a company, stayed in the States, sold my company 2 years later, and tried to figure out like what the heck I was going to do with my life. This was 2013.
What company was that?
BuzzDraft was the name of the company. Daily fantasy sports site. DraftKings FanDuel got rolled up into DraftKings. So 2013 comes along. I'm now like much more involved in crypto. I'm running racks of miners in my garage with my brother. We're mining Bitcoin. We're doing script mining, ETH ICO, like everything that's happening around that time. I ended up moving to Vancouver, start another company that was basically, this was 2016, CoinList, kind of before CoinList or like around the same time as that, did about $1 billion, ended up pivoting twice. I left, that company got acquired by People AI. Then I was playing with, doing everything from minting Gen Zero CryptoKitties. Like half of my life was in crypto, but professionally, I was just like trading and doing whatever. I ended up publishing an academic paper in AI with Noam Brown and Facebook AI Research. Got cited by DeepMind, which was like cool as a college dropout. Because actually, I left out a part between that where I ended up writing machine learning models, which was like a way for me to get back into computer science and selling them to a bunch of pro-based teams. And so 2014 and 15, this was like crypto was dying. There was less interest in it overall. This was before I started the other company. I was doing that and like got really into AI, published this academic paper in AI. Still had no clue what I wanted to do, was just like very much spending all of my time in crypto. And I flew my two co-founders out here the first week of 2018. And we built stuff. We were asked by a hedge fund to build like some on-chain trading strategies for the early dexes, which was like ARB and Triangle ARB, kind of simple stuff when they were IDEX, Ether Delta kind of era of stuff. Realized that everybody, just like nobody had any clue what they were doing. So we started doing kind of MEV before MEV was like a thing that was happening regularly. And so we were doing all of this ARB across everywhere. We were like stripping apart Geth and rewriting it for custom node discovery. And it was just like pure speed, like try to be the fastest in the world, like propagating your transactions into a network. And then one day we saw transactions pop up that were just like perfect block positioning with zero gas paid. And if they had been more subtle about it, we would have lost like a lot of money. We would have burned a lot of money trying to figure out why we like couldn't win anymore. But we saw it and it was just like perfect block positioning, zero gas paid. And we're just like, oh, like they're colluding with the miners. Like it's now a rigged game. This is like not a game that we can win at. And so we just like folded that up.
Because that marks the first empirical evidence of MEV.
Yeah, that's like 2019, 2020 era. I think probably like early 2020, something like that. And so like, obviously this whole space got commoditized and became flashbots and everything else. But at the time we were just like, it's a rigged game. The miners are colluding, like we're out. And so at the time, Binance Smart Chain was getting really popular. And every day I was just getting spammed with like more volume than Ethereum, more users than Ethereum. And I was like, I've been here a long, like 7 years at this point. There have been a lot of other chains, but nobody really like did anything on them, right? Like nobody actually used them. And so it was like interesting. And we started asking ourselves, like, what could you do if you had a chain that was just like fast and cheap, but you treated it as just like entirely ephemeral state? And then you have like Ethereum and you could like move state, more permanent state over there. And so we built a toy game for ourselves, which was just like, you would play the game on BSC, everything there would be treated ephemeral. And then at the end of the game, certain things would get minted back to Ethereum as like permanent NFTs.
Wait, so you turned Binance Smart Chain into a roll-up that DAs onto Ethereum?
Basically. And so, but what we realized in doing that is like, there was no way to trigger these events between chains without like a central core, like a completely centralized coordinator to trigger contracts on both sides. And we're like, well, that sucks. Like that like defeats the entire purpose. But bridges existed. So like, surely somebody's solved this, looked at all the bridges, were like, oh my God, everything is terrible. And all of this stuff is going to get hacked, which largely has happened since then. And so we started to build what we thought was a better bridge. This was kind of the precursor to Stargate. We're just like, listen, what do you need from a bridge? Like you don't want wrapped assets with all these security implications that shift onto the user. Like you really want native assets. You need this concept of like instant guaranteed finality so that applications building, our thesis was that like, most of bridging would just be abstracted from the user and the end application would just do it in the back end. So like it needs to be hyper composable for applications. Applications need this concept of instant guaranteed finality because like dealing with reversion cases is too painful for the end user experience. And so we went through all of this stuff that we thought. And then in building that, we realized like, there's still no way to trigger events on both chains. And so like you still need to build a transport layer. And then that became LayerZero. And so that was the entire journey. And it really was like not a thing that we wanted to build. It was just like, we want to do this other thing and it can't exist unless you solve the transport layer. So that took, I don't know, it took a while, probably like almost a year for us to arrive fully on like, okay, like now this is the thing we have to build.
Gotcha. So is, given that Ethereum doesn't have finality, well, rather it has like this epoch-based finality, is it like, how do you deal with that?
Yeah, for us, it's that one thing that we hated about most other methodologies at the time for this was everything was built in this monolithic structure of just like, we're gonna parameterize everything and you're gonna live with it or not. And like, I hope you like what we chose. And so again, we agnosticize all of this. Just like the application should decide. If you're an application, like anything in proof of work, like in all probabilistic finality, latency is just like a measure of security, right? So if you want to wait longer, you will be more secure. It's like harder to reorg the underlying chain. And so we just leave it up to the application. If you're dealing with $100 million transactions, you can wait 30 blocks or 60 blocks or 500 blocks, you do whatever you want. If you want to bypass a roll-up is a perfect example, by the way. If you're going L2 to L1, you can either wait for the roll-up period or you can opt to bypass the roll-up period. And like that's the application bears all the risk. There's no reason why the transport layer needs to be like opinionated about that. Like application can just decide for themselves.
Gotcha. Okay. That makes sense. I'm going to take some questions from the audience. Makes it more interactive. G Taurus asks, what's the next major milestone for LayerZero? Will LayerZero have decentralized governance in the future?
Yeah, it's an interesting question. Next milestone for LayerZero is a lot fold. We're probably going to launch like 4 to 5 major things in the next 6 months. We've obviously like been pretty transparent that the token is coming in the first half of this year. I think that's what this is in reference to. The question you need to ask yourself is like, what governance surfaces would a protocol have for that side? Like most things that have governance have areas of mutability. LayerZero is 100% immutable, right? Like even if, governance voted something, like we can't change the contracts. It was part of the core thesis and how we built is like everything has to be entirely immutable. So like immutability, censorship resistance, and permissionless are like the 3 core tenets and how we built everything. I'll not answer any more of that question, but for governance stuff, you just have to ask yourself like what surface would make sense to have governance on.
Okay. I guess I would add on to that with, if, and I'm speculating obviously here, it's that if there's a ZRO token, what would it do? I guess it has it would govern something, probably the protocol and the parameters that dictate how it functions.
So I think the way that I think about mechanism design in general, or like economic design, is you have to ask yourself, like, who in the protocol itself, when designing a system, like, who are the parties who need to be properly incentivized, and like, what do you need to do to bootstrap that? And you can think about this from like almost any system, right? And in the system of LayerZero, there's like 3 groups largely that need to be incentivized. It's the verification layer. So any of these groups who are providing verification, if this is IBC, this is relayers, if this is any other system that's living in there, like there's some way that they price being able to create an attestation or basically create this layer of security. So the verification layer needs to be incentivized. The execution layer needs to be incentivized in some way. And then the developers ultimately are like, the developers, and they have their own users and everything. And so when you build a system, like, those are the 3 parties you kind of want to construct a system around and create something that is sort of like holistic and obviously bootstrapped early on between them.
Yeah. Well, the question is, how do you balance incentivizing the right people with maintaining a relatively functional, neutral transport layer? Like, it's like, if we, like, the internet doesn't, like, users of the internet don't govern how TCP/IP works. Like, we don't regularly, talk about changing the parameters like we do for blockchain. So how do you toe the line, I guess? How do you balance it?
Yeah, for us, again, I don't think that, like, we built the contracts immutable so that we cannot change them. I think if there is any way that you can change them, they will be bastardized over time. We'll end up with a world where you have, like we have with the internet today, like, yeah, TCP/IP exists, but then like the ISPs, like, all the value accrues up to the ISPs, and the ISPs just gatekeep everything. And like the telco companies are many trillions of dollars, like, globally, and they just like own this entire layer, right? So, and there's all this bad stuff that can happen if you don't have that structure. So if you look at most other messaging protocols, having upgradable contracts, like, you can think about governance enforced censorship. You can think about the ability, like, none of them have non-sorter enforcement. So if you don't have ordered delivery, then you're going to have a financial system where you can, and this is like my co-founder work in like packet fairness in exactly this. So like a very top of mind for anybody in like high frequency trading and stuff, right? Like, do you want a world where at the packet layer, transport layer, like, you can just have the person who pays the most have priority routing? So like Citadel is now front running, rather than every transaction from Robinhood, they get to front run like every transaction period across like the future of the internet, right? There's all of this stuff that can go bad. So I don't think any of these protocols building should have any surface for upgradability or the ability to like change those things. So I don't think governing parameters is really super useful. What I think you want to do, and the way that we approached it anyways, is, again, the protocol itself is immutable. The applications can decide. So if Robinhood wants to build an application that says, hey, we are going to create this method of unordered delivery, and we're going to like sell order flow, that's fine. But like that, the technology layer doesn't enforce that, right? The technology layer isn't something that a government can say, hey, we don't like this user or this developer or whatever, like, you can no longer transfer packets there. It's there is no ability to introduce any of that. It has to be done at the application layer, which is where I think that should live.
Right. Okay. So if a government wanted to censor something like this, like in this example you brought up, they would need to basically hammer down each and every application that uses it. But at the same time, any other application could spin one up. Yep.
So if we, again, government crackdown in all, US, Canada, everywhere, LayerZero Labs doesn't exist anymore, the protocol will still exist, and anybody can spin up infrastructure. Anybody can spin up applications. All of that is permissionless. Like, nobody can do anything to censor a pathway that wants to exist.
Okay. And harkening back to the value accrual to the ISPs. So I mean, I guess the implication would be that you're reasoning about how to retain that value at the transport layer so that it doesn't get extracted by the application layer, right?
So I think, again, if you look at right now, we have this technology stack of the internet, And then you have ISPs who sort of like gatekeep and have a monopoly on pricing and distribution. And then you have like the application layer, right? And there's really valuable things at the application layer. There's Google and Facebook and all of these. There's very valuable things at the ISP layer. You can basically do a couple of things now. One, like the ISP layer can largely go away. That almost lives within the protocol itself of like any modern like crypto transport layer. And so the question is like, where does that value go? Do you disintermediate completely? Is it like owned by the people who own the transport layer to incentivize the do the ISPs become the verification layer? Does this become the people who are providing security to the network? Does this become people who are providing execution, et cetera? So I think a lot of the goal is disintermediate a lot of that, right? Like maybe there doesn't need to be $5 trillion of value sitting here in ISPs. Maybe it can be $1 trillion more well-distributed, or it can be, whatever that number is, it could be a largely reduced number. So the goal would be like make the system much more efficient as a whole and distribute the value of that sort of across many parties that create this mesh.
I see. So the goal or the design methodology would be one such that lower the barrier to entry significantly, such that even small retail players could provide some piece of infrastructure and not have that be captured by only mega institutions that could provide really heavy infra.
Yeah, I think it's just a nature of like, again, monopolistic tendencies versus like decentralization. Like if you look like in the US, the amount that people pay for phone service, for internet service, for all of these things is so much higher than anywhere that has more like free markets around providers, and just like the way the telcos are structured, like really like almost an order of magnitude higher. And so you can just think about like if you can distribute that in a like, or again, disintermediate that or decentralize that more broadly, then naturally like it should be much more cost effective. There isn't a reason that we pay what we pay in North America other than the fact that there's just only a few providers who own the entire distribution channel.
Yeah, wouldn't you say that that's rather a symptom of high barriers to entry because it's like so expensive to lay down lines and like create physical infrastructure in whatever local like city you're in, right?
But
and
it's also regulation. It's not just cost, right? Like look at Google. Like Google tried to roll out Google Fiber everywhere. Yeah, 100%. Right. It's largely, I think, regulatory driven more than high barrier. I mean, it is a high cost entry, but I think there are a lot of people who would pay that cost, and you see it done in many other markets where there are like a more competitive landscape. I think it's more regulation driven than anything.
Yeah. And so silver lining is great. If you want to compete in the blockchain landscape, it's a free market. And so you don't have to, there's no such thing as like the US federal government trying to breathe down your neck and create like a racketeering game.
As long as we build the rails correctly, right? Again, there are rails that are fully upgradable that have the chance to be bastardized by regulation. I think the goal of immutable systems and the goal of immutable rails is that once it's live in the wild, there's no putting the genie back in the bottle, right? It can't be changed. It exists and it's just out there and people will use it how they use it.
Well, yeah. So speaking of that, like how can it be gamed? Given that, what's even lower in the stack underneath the transport layer would be the L1 or like the underlying blockchain, right? And so can there be transaction order priority given more gas paid or something like that? Is there something like that dynamic?
That's effectively what, every chain that has a mempool has exactly that, right? You have like gas priority auctions. And so like 100% yes, the goal is that you don't want to introduce another layer of that in the transport layer, right? So again, maybe layer ones will eventually create fairer and fairer systems along the way. You don't want the interledger sort of transaction layer to have a completely new system of unfair ordering and transaction priority on top of that.
Mm-hmm. Okay. All right. Another question from the audience. Is it possible to implement privacy on LayerZero when bridging, for example, on a DApp like Stargate?
Yeah, 100%. So there are a bunch of things you can do. So people normally, when they think about privacy, there's two things that they're interested in usually. One is user privacy, which is like not letting anybody else see what you're doing. And the second is sort of, let's say, MEV shielding, right? So one of the things about cross-chain transactions in general, doesn't matter what protocol, is there's like, as long as long as the messaging layer is fair and ordered delivery, there's no additional surface of MEV. Like if you commit a transaction on chain A and you're going to chain B, like just because you have 10-minute heads up doesn't really give you any ability to do it, right? Most MEV is abstracted in a matter of like milliseconds by, again, getting into exact block positioning and sort of like disjointing fair price and then capturing the spread that the user would be willing to pay. So if somebody 10 minutes ahead of time like disjointed fair price here, they're just creating MEV. Like somebody else will just capture that and arb it back down. They really need to be like around the transaction that's being submitted. So there's no like additional layer of MEV that's happening, no additional surface. It just, as soon as it gets submitted in the destination chain, it goes in the mempool, whatever the MEV that would be captured from that mempool gets captured, but not, it's, again, assuming fair ordering, there's nothing else that's happening. Fair ordering is like, not many protocols actually have fair ordering, but from the privacy side on like shielding what the user is doing, you have to understand like LayerZero at its core is arbitrary contract invocation with a bytes array. That's what it is. Invoke a contract here, generate an array of bytes, and like invoke a contract there with that array of bytes. And so you're still committing a transaction on source chain. So that's totally visible to the world. The question is, can you shield where that goes or what that looks like? And yeah, there are a bunch of things. You can do this with hashing schemes. You can do a bunch of different things to obfuscate kind of what that looks like and where that's going. But again, all of that would live sort of at the application layer through this secondary sort of like system that's built on top. At the protocol layer, it is just a one-to-one transaction between like something gets submitted here, something gets submitted here. But the application can bundle like you batch a bunch of transactions here, and then a bunch of transactions are triggered as a result of that across there. And like the end user going out is only revealed that, you think of a lot of other systems that have been built kind of like this. So definitely you can add layers of privacy. And if the underlying blockchain has private transactions too, there's this is assuming the underlying blockchain is fully observable.
So speaking of the application layer, LayerZero currently powers Stargate, Aptos Bridge, BTC.b, DefiKingdoms, Radiant, TraderJoe, Pancakeswap, Abracadabra, HOlograph, Gas.zip, and a whole lot more. And that was the list that you provided me last night. Couldn't get it from ChatGPT, by the way, which sucks. I think, GPT-4 is so overrated in my opinion.
Agreed.
I'm like, okay, wait, you're not only are you giving me wrong data, but I'm having to correct you. So why am I paying you for me to give you the lesson? Anyway.
Yep. I have my own. If you want to talk AI, again, I spent a lot of time in it. I have very strong thoughts around the current state of AI, but very much agree with you.
I'm going to put a pin in that because I want to get your opinion at the end of the show, since it's like a little bit of a tangent. But yeah, I have opinions about it too. I think people like really overestimate its ability right now. But anyway, so yeah, on the application layer, so just last year, you've made, or LayerZero in aggregate has made over $50 billion in revenue, and
so to be clear, there's been $50 billion of like transactional volume that has gone through the network. So LayerZero treats everything as an agnostic packet. It doesn't matter if it's $100 million transaction or a 1 cent NFT or an application just propagating state data. So you think about it again, everything on the internet packets just like a blob of bytes. Everything's just a blob of bytes. LayerZero protocol doesn't care. Application layer might care. So like Stargate, Stargate takes 6 to 10 bips on every single transaction, depending on if it's cross asset and all this other stuff. It monetizes in its own way. Other applications monetize in their own way, but LayerZero itself has facilitated $50 billion of transactional volume, probably about, I would guess, $200 to $300 million of like gas across all chains. It's assuming your source and destination sort of aggregate. But yeah, it's been, really widely used. 100 million messages total, largely across EVM chains. Like very meaningful amount of application usage and gas spent, both from a nominal like dollar perspective.
So, in terms of the fee model, how is that broken down? It sounds like LayerZero takes some fees as part of its revenue on top of what the application charges.
So again, every application can charge nothing. A lot of applications do. Stargate does because it has to pay its LPs. It has pools of like latent liquidity there, but you could have like an OFT like MIM or something that doesn't charge anything, right? And so the application doesn't need to. They just optionally, they can do whatever they want. The protocol itself, again, just this mutable set. There's a couple of entities that exist there. One is the validation layer, the verification layer, right? So again, you can imagine you have this DVN adapter that basically just runs IBC. IBC can be the full verification layer, like within LayerZero at some point in time, right? And so in that, it's like, okay, right now, relayers aren't really incentivized. They can still relay. There would be zero cost at that layer. And the execution layer, if you wanted to abstract away gas, again, has its own cost. Right now in EVM systems, you normally have a couple of parties who are providing verification. They each have their own pricing mechanisms. So totally open marketplace that will largely get commoditized down. But you can think Polyhedra, ZK Light Client, when they're generating a snark, is different than like Google Cloud, which is different than Chainlink, which is different than Wormhole, which is different than everybody, right? Any of these systems can kind of live within LayerZero. They all have their own pricing mechanism. And the execution layer is just, hey, you're going from Ethereum to Polygon. You're going to pay $1 in Ethereum and 10 cents in Matic. We're going to have you just pay $1.10 up front, and we're going to completely abstract that experience away from you. You're not going to have to sign multiple transactions. You're not going to need to have Matic in your gas in your wallet ahead of time. You just sign one transaction on ETH, whole flow gets executed. Matic side has been paid on your behalf. And they usually mark up destination gas roughly 3 to 5%. So in that case, rather than paying $1.10, you'd pay $1.105. And then that would happen. So, yeah.
So how much would you say LayerZero made in revenue just last year?
I mean, LayerZero, the protocol, has made zero, right? There's no fee within the LayerZero protocol, right? LayerZero, the protocol, makes no fee. It's all of the parties who verify and execute and do everything who lives on top of it, right? Like how much did IBC make as a protocol last year?
Oh yeah, IBC doesn't have any fees though, so like it's
that's
like,
the point, right? No, IBC, yeah, exactly, and that's exactly the same with LayerZero, right? The DVNs, the verification layer can. So eventually the relayers in IBC may charge a fee. There will be something, and the fee won't go to IBC. The fee will go to like the relayers who are part of the ecosystem running it, right? Right now they subsidize it because it's usually the chains like running them themselves.
Mm-hmm. Wait, so is LayerZero Labs running a verification node?
Executor. So before we ran a relayer, which now is turned into executor in the V2 model. And then
what would be the difference?
Executor. So you have a transaction that's going through chain A, chain B. Some state gets written on chain A. Somebody is going to like attest to that state. And this can be done in any method. This is what we call DVNs or the verification layer. So let's say you as an application
running a light node of the source chain is verifying
exactly right. Running nodes and creating an attestation. So you might say as an application, hey, I want 7 out of 10 of these groups to sign off. They all sign off, whatever, they get paid. As soon as that's done from the protocols, as soon as that threshold has been met, from the protocol's view, the transaction is valid and complete. Now, a couple of things can happen. The user can go and they can self-execute on their own, which means now they need to get the destination gas in their wallet. They need to trigger the event and they can execute it on their own. The application can execute it for them on their behalf, or you can have paid an executor upfront, which again is just this gas abstraction. It's saying, I don't want to have to think about the destination side. I'm going to pay you the 0.5 cents over here and pay it all in ETH, and you're going to pay the Matic on my behalf on the other side. And then the executor comes through and does that. So if you think about us, we run one of the executors. We do 50 to 80 billion RPC calls per month right now. We've submitted like 100 million transactions to chains. On Arbitrum and Optimism, we're like 6 of the top 10 gas-consuming applications. So probably about 50% of the transactions being submitted on those chains came from us over a period of time. And we, have to maintain gas across 50 plus chains, quoting n-squared pathways for pricing. So $30 million worth of gas assets spread across all of these, and then giving real-time pricing across all of them to create the gas abstraction layer. So that's the executor. But the executor lives, again, entirely outside of the protocol. If nobody wants to use an executor, users can self-execute. And the reason for that is that what you don't want is the executor to have any control over liveness. You can imagine a governance vote is going through, and it's in favor of this executing party, and they're gonna like, okay, great. We're just gonna like casually have downtime for an hour, right? While this vote resolves, and like no votes will go through. So we guarantee we get the win, right? The protocol itself enables it so that the end user can just go and cast their vote themselves. They can execute everything on the destination chain. So that's what you want, is a decoupling of liveness and security within the system.
Okay. And is the reason why the like someone running the executor is like relatively higher barrier to entry on the EVM because it's more expensive to run in a, whereas like imagine LayerZero has a transport layer directly to Bitcoin, and if somebody were able to run an SPV node, they'd be able to execute it themselves.
Yep.
Okay. Okay. The other question was, is the protocol opinionated at all about how many number of executors there are and what that threshold is, or is that all on the application layer?
Nope. So protocol itself is not opinionated. I think the market should be pretty opinionated. And I think the market should care about execution quality and verification quality and pricing and all of these things, right? But I don't think the protocol should have any opinion over that. Like the protocol, in the same way, like Ethereum doesn't care if you're building dog coins or building Uniswap, right? It's like, it's just a thing that can be used.
Mm-hmm. Right. Okay. So, I mean, so there's it's a permissionless to get into the execution, the executor node set, but then what determines how high the threshold of attestations is?
Application.
Okay. All right.
Yeah. There's no like single set, right? Any application, if they wanted to, they could just say, I'm going to do the verification. I'm going to do the execution. We're not going to use anyone else. We're just going to run it ourselves. We don't need anybody else. Or they can say, hey, I'm going to do some of this, but I also want these other groups. Or they're going to say, I'm going to do none of this, and I want these other groups. Every application gets to define exactly what they want. So, yeah.
So, yeah, right. And I guess the zeitgeist in EVM with these transport layers is that it's normalized to pay for bridging, right? But then in Cosmos, it started off as relayers do all of this work for free, and so they're running at negative EV, and so a lot of them have actually had to shut down. So would you say that if in Cosmos we normalized paying for IBC transactions, that if relayers if they all started charging a fee, then it would become profitable again?
Yeah, of course. I mean, it's really just a question of like, how much utility is there? Like, what will users pay to move assets around this? I think EVM has shown, and all of these other ecosystems have shown, like users are willing to pay. It's like very valuable to have this. Now, I mean, somebody's paying for it right now. It's just the relayers are subsidizing it themselves, right? So they're like, is a cost. The question is, should the cost go into a free market, or should the relayers like continue to subsidize this? And I think what you'll see is over time, they won't continue to subsidize it forever, right? And a lot of them will just like stop doing it. So somebody has to pay for it in one way or another. People can like pretend that it's free, but there is a real cost. And the question is just like, where does that cost actually lie? I think, again, it is extremely valuable to the end user to be able to move, and to the application to be able to like move state, move value, move all of these things across chains. I think people are very willing to pay for that.
Right. Absolutely. Don't disagree. Going back to the ZRO token, is there anything that any alpha leak that you could provide? Like, is it going to be like, what's the utility? Someone hinted at a governance token. Is there going to be some kind of rev share model with it? Anything you could leak?
So no, we're like hyper, anybody who knows much about us, we're like hyper secretive as an organization, not for the sake of being secretive, but more for the sake of like egalitarian and fairness, right? We try to just like never leak anything, announce everything. We usually just like come out of stealth with like, here's a thing that we built. Everybody knows about it at the same time. So we will publish economic papers and do that. All of that will come and will be sort of widely distributed. Yeah.
That's exciting. And so if somebody wants to potentially farm these tokens in anticipation of some kind of an airdrop, what would they do?
So we've not said anything really about distribution mechanisms or anything else. So I, as always, like wouldn't recommend people, do or assume anything. I mean, I think people have made lots of assumptions to date. I think that's very clear, but we've never said anything one way or another. We'll announce everything again publicly all at once.
Okay, fair enough. All right, I'm gonna transition our conversation back to the AI topic because that was interesting. What are your thoughts about AI? I think so. We've covered everything that I wanted to cover on about LayerZero. So now like just go to the fun part. By the way, if you're in the audience and if you have questions specifically about LayerZero you want to ask, then go ahead and put that in there.
It's been such a nice audience too. I expected to like really get in and like get to argue ICS and all this stuff. But no, this is pleasant.
You're even into ICS. Well, I mean that's pretty deep into IBC territory. You know what you're talking about. You did your research.
Yeah, I mean, I think you have to understand how every system works. You want to understand the set of trade-offs. And again, like if we thought an existing system worked that was sort of fit all needed criteria, like we would have never built this. It's just like our intention was never to build a company.
Right.
Yeah. So I mean, for the AI stuff.
Oh wait up. Sorry. I actually wanted to go back to that topic. It with your lens on reality right now, what's your vision of interoperability in like 2 years from now versus 5 years from now and 10 years from now? Like, do you think we're in the Cambrian explosion phase of a whole bunch of design models, including blockchain scaling models, like modular versus monolithic, as well as like what sorts of different bridging options there are? Like, what do you think the future, like, where do you think we're going to go? What are we going to converge on?
Yeah, I think there's two answers. And one answer is like from the protocol design, we've tried to just be hyper unopinionated. We don't care if the world is extremely diverse sets of totally orthogonal layer ones or like Ethereum only as a settlement layer and infinite layer twos, right? It just doesn't matter to us. You need horizontal composability there. Like the protocol should just be this primitive for communication as it's needed. The analogy my co-founder gives all the time is like, listen, like 99.9% of all compute still happens on like local machines, but like the internet is still the internet, right? Like you have to build the layer to like connect that layer of compute. And so like as a protocol side, we try to stay pretty unopinionated. My personal thoughts are there are like very strong orthogonal trade-offs between a bunch of systems that are very clear to me, and I think to most, that are not going to get sort of pulled into one single system. So what Solana does and what Tendermint does and what Arweave does and what Ethereum does are just like very different, and they all have like benefits and differences. And then you move into something that's more like, okay, here's Ethereum and here's like a bunch of like small changes in like the underlying code. Like I think a bunch of that gets washed away as like the underlying layer scales. So I think a bunch of the things that are like small derivatives to try to make iterative improvements now largely get folded in over time into singular systems. Just because of network effects and costs and everything else. There's just like a ton of reasons of why I think that's true. But I think like the strongest orthogonal trade-offs will very clearly be here to stay. I think we see it in many, many other systems that are built even outside of this industry, that there's just like different things are needed. And you see it in programming languages, right? Like people who are scripting in Python are very different than people who are like writing kernels in CUDA, and like, it's just like different. You use the right tool for the job. And I think that largely will be how things develop at the execution layer. Because at the end of the day, every blockchain is just a distributed execution environment.
Yeah, I'm going to use the refrigerator example. You don't think that there's going to be some convergence on like the most optimal model? For example, like refrigerators, right? There was, before we, converged on the refrigerator that you know and love today, there were a whole bunch of different designs. And so there's a Cambrian explosion of designs. And then at some point, as the technology matured, every company converged on one design by and large.
So
the
plus or minus differences
in shapes.
Where I think that falls apart is every refrigerator was ultimately trying to do the same thing. They're trying to do it in different ways, but they're all trying to solve the same problem.
You don't think blockchain scalability is trying to solve the same problem? And
I don't think every blockchain is trying to solve the same problem. Like I don't think Arweave is trying to do what Cosmos is trying to do, right? They're just trade-offs, right? Even you look at databases, right? Like look at approaches to relational versus non-relational versus now vector DBs, like whether it's programming languages, whether it's databases, like there are very like just trade-offs that need to be made to achieve some outcome where this thing is optimized for. I think anybody who's like any reductionist argument of like this is basically all trying to solve the same thing. I don't think they're trying to solve the same thing. I think ultimately, like, yes, you're like writing state to distributed ledger, but what that actually is optimized for, I think is different. I don't think there is like a single solution that is just like clearly going to be the best for all types of state and all usage and everything else that goes into that.
Okay, so you're suggesting that the world of use cases that could benefit from using a blockchain, that not one single architecture is going to win out. Like it could be an application specific chain or a roll up, could be a monolithic chain again that does everything, I guess. And then it's just going to be a world where it's like a composite of all of these things.
Yeah, I think if a single environment would win, we would have only one database environment. We'd have very few programming languages. We wouldn't have Windows and Mac and Linux. And there's just like different things are good at different things, and there's lots of stuff that can be built on each of those trade-offs.
Okay, now let me ask you this: do you think that we're going to move towards like a standardized transport layer, or are there still going to be a whole bunch of different options as well? Because I'm harkening back to so I did an interview with Andreas Antonopoulos like years ago on this very podcast, and he suggested that we're moving towards standardization, just like how the internet evolved, where there's TCP/IP and we all just use that, and then there's like HTTPS or whatever, So do you think we're moving towards standardization, or there's going to be a whole bunch of options?
So I think right now the market is a little bit confused around what is actually happening. I think you have groups who are trying to, they say they're solving the transport layer, but really they're solving like the verification layer. For us, when I talk about like this minimalist thing, right, we're trying to solve the transport layer and we're agnostic to the verification layer. So if you take a chain link or a wormhole or any of these other groups, like they can live within LayerZero, right? Our transport layer is agnostic to that. They have a specific validator set that's saying, hey, this validator set has some economic security tied to it, some level of trust, and you want to use this transport layer in this thing for the trust function. I think there will be many sets of trust functions, but I think the transport layer basically will get resolved down to one. So I think people are trying to solve two things at the same time. I think most of those systems won't work because I don't think there is a single, like the bet is that there's a single verification layer that will deal with everything. And I don't think there's one set of parameterization or cost that users will pay that fit every single application. I think that the needs of the application are too diverse. Clearly, I'm biased, but I think transport layer gets reduced down to a single standardized set or very small numbers, and verification layer is like extremely robust and expressive.
Okay, so the best analogy I could think of for that would be design of the airplane. There's a single standardized design, like the best, most optimal, safest way to design an airplane. No question about that. But then on the application layer, there's a whole bunch of different companies like airlines, like United or American Airlines, or
I'm trying to think if I have a different analogy. I mean, even on the transport layer, you have TCP/IP, you have UDP. There are a couple of like underlying ways that you might want to deliver a packet or like have communication layers. But in terms of the verification layer in the existing systems, we basically end up just having like very small subsets of groups, like who's providing HTTPS certificates or all of this. I think that verification layer ends up being more diverse. I don't know if that's more akin to an airline, but something like that.
Mm-hmm. Okay. Mr. S, somebody's weighing in from the audience. I think the future of energy is going to be something else entirely, i.e. the first light bulb never came from the overall advancement of candles.
Yeah.
Okay, so this is going, we're talking about the title and the hint of our entire podcast. Now, what does it mean when you say LayerZero is eyeing Cosmos? What does that mean? Tell us.
Yeah, I mean, clearly you've heard me talk about IBC and everything else that lives within the ecosystem. We've done a lot. We've spent a lot of time going through what that ends up looking like. Our plan has always been to support sort of every ecosystem. I think we're huge fans of the Cosmos ecosystem. I think it has one of the highest densities of like intellectual capital of any ecosystem within the space, and has just like really been like a prisoner of its, I don't want to say of its own making, but it's really been like just stuck for a very long time.
The right curves are right curving.
I mean, for the amount of, again, intellectual capital that Cosmos has, for the amount of like just like such high catalyzation of the end users, like people care so deeply, and yet like the largest dexes and economic stuff like still have such a small overall like value being processed relative to anything that lives in EVM, right?
Why do you think that is?
I think it has just been extremely, extremely hard to break into the ecosystem. I think it's seen as adversarial for a lot of developers. I think a lot of the Cosmos ecosystem has been quite adversarial to us historically. So I think there's a lot of like,
that's not true. You're on this podcast.
And that is true. Again, there's some open arms, but no, I think in general, I think there's a view of like I don't know, push outsiders away kind of thing. And then I think just the user experience of being able to make it, like there just hasn't been this strong draw. You have to be able to port in liquidity from whether it's Ethereum or Bitcoin or wherever else. And I think as soon as that is made just like dead simple and easy, I hope it allows it to just like flourish in a way that it hasn't in terms of like the economic value being sort of like transacted other than just moving tokens around.
Would you say that permissionlessness in other ecosystems had a lot to do with how open the perception of an ecosystem is?
I actually think it's the if you ask me, one of the best things that Ethereum ever did is really, really try to be credibly neutral and like as agnostic as possible. Like Vitalik doesn't say, meme coins are bad, and he doesn't say ICO scam, like maybe he'll say ICO scams are bad, but like these are just things that exist and like anybody can build whatever they want. And I think what has happened in some other ecosystems is that they're like very, very, very opinionated as an ecosystem, just as like an approach as to what is like a good and a bad application, as to what is like, no, we have IBC, so we don't want to actually, all of these things are just like very, very opinionated in a way that is, I think, hard to get overall adoption. Like you have to join the cult if you're going to come in. Otherwise, there's just like fighting at every corner. And so I think a lot of it really is like people feel like they, I don't know, maybe it's harder for them to want to go build when they can't just like build the thing that they want. They have to build the thing and then have everybody tell them it sucks because like it's not the way that they expected it to be.
Right. Gotcha. So yeah, and that's how you see a lot of the polarization in the debates, like the governance debates in Cosmos.
Yep.
Yeah. Dan GPT asks, what are your impressions of Llama 2? How can the integration of blockchain contribute to the democratization of access to AI?
Yeah. So I'll give you my general, I know we only have 6 minutes here, but my general stance is that when I got into AI, it was the boom of reinforcement learning. I saw DeepMind's Atari agent demo, and I was just like, okay, this can do anything. It's amazing. Like you can just envision pure blue sky, what you can build. And neural networks were not like new, right? Like Jan LeCun, the 70s, like they've been around for like a very long time. But what you realize is like, oh, we have all of this data now. If we throw a ton of compute at it, it can like do something pretty interesting. So we went from this flat line to like massive spike up. And then everybody priced in that the growth rate would just continue to grow at that rate. And so it was like, I don't know if you remember, but Elon Musk was like, we're going to have self-driving cars within a couple of years. You're going to have a robo Tesla. Nobody's going to own cars. You're going to rent out your car into the fleet and all of this stuff. And then we just like hit an asymptote and like things just stopped. Like, yes, we solved chess and poker and Go, but we thought it was going to basically solve everything, right? And so I got really disillusioned towards the end of it that we're just making these like mediocre heuristics and really it was like really incremental gain. And then you have LLMs now, and LLMs are like not new at all. Again, been around for like a very, very long time. And all of a sudden we realized like if we literally spend $1 billion on compute, like they can do something pretty interesting. And now we have this hyper growth of like, we're actually building, clusters of H100s that are worth like $5+ billion. And, inflection raises around, it's $1 billion, or like $980 million of like pure compute from NVIDIA, right? Like you're literally spending billions of dollars of compute into single systems. And so, they're getting better. They're more interesting. I'm not convinced that just, we have not done the same thing. I think we hit a clear asymptote. I don't think we have AGI anytime soon. All of that said, I think one of the shining lights out of all of this has been Facebook and Llama, right? Like who ever thought that Facebook would be like the shining beacon of decentralization when it came to AI? But I think they really have like stuck to open source models. I think what we've seen is that like now with Llama, like you'll have people who spend like $300 in an evening on a laptop generating models that are like 90% as good as GPT-4, which is crazy, right? So I think it's been incredibly vindicating to see that happening. And I think this push for like open systems. I've been a huge skeptic lifetime of the blockchain and AI intersection. I think everybody talks about like, we're gonna have the data on chain and where everyone's gonna be able to train models. I'm like storage is like that is the thing that blockchains like aren't good at. There's just no way we're going to have all of the data living on chain. You talk about having the models on chain, like there's a couple of things, but when I think it's very interesting at like the intersection of the two and like democratization of AI, I really think it's about payment rails for autonomous systems. Like you think about a world where wanting to do anything, you're going to have hyper specialized agents that need to interact with each other. I have an agent, I say, hey, I want to like do this thing or research that thing. It might need to pay somebody else to get information. It might need to pay somebody else to run. You can think about like Wolfram Alpha, like running specialized compute, whether it's synthetic materials or, whatever, it doesn't matter what it's doing. The point is like, you're likely not going to have all of these things connected to the traditional banking system, connected to your credit card, all of that. You need payment rails for like autonomous interaction of agents and value resolution. And I think that is like an incredibly compelling use case.
Do you actually see that use case being implemented anywhere here?
I think it has been talked about a lot. I think one of the downsides of our space is that a lot of people view it with very heavy skepticism. And so I think it's a lot of the AI world still views it with heavy skepticism. But like you saw last night, there was a tweet that like went pretty viral of like somebody like somebody made $30,000 last night, like training this model, and all the AI people were like, what, how is this a scam? And like, like they're starting to see it. I think you have people, Eric Voorhees is working on this. There's a bunch of people are like doing cool stuff around like AI adjacency. I think is very interesting. I don't think we're there yet in terms of real payment rails or interactions between agents, but I think it is near inevitable. I don't see another system that solves that.
Right. Wouldn't it be, and I think, I don't imagine a world 20 years from now where there's not this like almost sentient AGI sort of figure scrolling through all of the value on the blockchains and just out MEVing and outplaying all the individual players. I don't know.
It's the question is it a method, like, is it a method of prediction, right? So you look at Renaissance, you look at, whatever, in hedge fund world, like, yes, this has happened. Like the people with the best models are winning, but there's also like the systems engineer. Like at the end of the day, like you need to be able to build the HFT system that like submits, that basically wins the race to front run everybody. You're still going to need to like build a system that does that. Maybe these, maybe you'll have agents who can actually build the system itself. But I do think like yes, they will likely be better at predicting things than humans at very specialized, like narrow fields and in almost everything, or definitely in many things. It's not totally clear to me that it will be better at building the system that propagates transactions and wins the right to produce and wins the system within there. The fastest, and being the fastest in a system like this is very important in the current state of the world, at least.
Gotcha. Well, yeah, it's a brave new world we're in.
Yep.
Mr. S, in my opinion, the Cosmos ethos is like the Borg from Star Trek. There's no real competition. It'll just assimilate all other ecosystems.
Guess we'll find out.
We'll find out. All right, great. We're going to go and close this interview. Thank you, Bryan, so much for such an insightful and interesting conversation. I really appreciate when we have deep, in-depth conversations like that, especially when you're going at 70 miles per hour.
Thank you so much for having me.
How can people find you?
At Primordial AA on Twitter, but you can just look up LayerZero Labs, or I'm around. I'm easy to find. Probably way too accessible, but I should be easy.
All right, and congrats for you, those of you who are listening to Interchain FM in the audience. These are one of our most engaged alpha seekers, and I think you guys are the right curve people who are 6 months to 8 months ahead of the curve. If you like this podcast, go ahead, and the best way to support our podcast is to delegate to our validator, which is running on Cosmos Hub, Osmosis, and Canto. We're soon going to be running it on Celestia as well. So look for that. And with that, let's close out. Thanks, everyone. See you.